Hey everyone, welcome back to your channel name. Today, we're diving into CarMax, the used car giant, to answer a big question. Can its stock hit $1,000? We'll break down its strengths, weaknesses, competitors, financials, and future plans. Stick around and let's get started. CarMax, ticker KMX, is America's largest used car retailer, with 238 stores and a growing online platform. Its stock is trading around $60, with analysts predicting $82.86 in the next 12 months. A $1,000 target? That's a 1,600% jump. Highly unlikely given CarMax's 5 to 10% annual revenue growth. But let's see what drives this company, and if it's a solid investment. CarMax shines with its no-haggle pricing and a massive national inventory, building customer trust. Its digital sales are booming, and it's adapting to electric vehicles with tools to check battery health. On the flip side, CarMax has a hefty $19.5 billion debt load, with a debt-to-equity ratio of 310%. Rising loan defaults in its financing arm and slower inventory turnover are red flags, especially with high interest rates. How does CarMax stack up? Its net profit margin is low at 2.08%, but it's growing steadily, up 0.19% yearly. Compare that to AutoNation's 6% or Carvana's 10%, which benefits from its online-only model. CarMax leads in per-unit gross profit at $2,407, but competitors like Carvana are catching up with faster sales growth. CarMax's financing and warranty plans add high-margin revenue, but loan losses are a concern. CarMax's $19.5 billion debt is steep, but its operating cash flow jumped 67% to $1.04 billion in 2025. Free cash flow soared 245% to $541 million, enough to cover near-term debt payments. Long-term? Refinancing might be needed if EV investments ramp up. Its financing arm and warranty sales boost cash, but rising defaults could strain the balance sheet. Since its 2002 IPO, CarMax has delivered 800 to 1,000% returns, roughly 10 to 12% annually, matching the S&P 500. But it's lagged recently, down 20% in the last year versus the SP's 25% gain. Looking ahead, CarMax aims for 2 million unit sales by 2030, with a big push into used EVs. By 2040, it could tap into autonomous vehicle markets, projected to hit $7 trillion by 2050. Political risks like tariffs or EV subsidy cuts could hurt, but a shift to used cars and eco-conscious buyers could drive growth. Bad news for dividend hunters: CarMax doesn't pay dividends, focusing instead on growth and buybacks. Short-term, expect 30 to 40% upside to $80.90 by 2025. Long-term, 8 to 10% annual returns are possible, but it's riskier than the S&P 500 due to debt and economic swings. So, $1,000? Not likely. But CarMax is a solid long-term bet for used car and EV growth. What do you think? Drop your thoughts below, hit that like button, and subscribe for more stock deep dives. See you next time.